Step 1. Strong and weak market structure breaks. Market structure breaks are the first significant sign of possible trend reversals. I'm using the word possible because no one in the world can be 100% sure when it comes to trading. MSB is the core of price action and smart money trading. Probably 80% of all price action trading strategies involve market structure breaks. It does not matter if you are scalping 1-minute charts, day or swing trading, or even investing. If you do not know MSB, you are one step behind of every trader and investor. Okay, let's remember basic MSB. As you can see, when we are in a downtrend, the moment we break the final lower high to upside, that is our market structure break. Vice versa, in an uptrend, the moment we break the last high or low to downside, that is our market structure break. This is how simple to identify market structure breaks. However, there are two types of MSB, strong and weak. Identifying strong market structure breaks is easy. First, identify the deepest lower low. Second, identify the lower high, which creates the deepest lower low. If the price breaks that lower high at once with strong candlesticks and closes above it, then it is a strong MSB. Let's see an example. This is our deepest lower low. And this lower high creates the deepest lower low. Now, we have to break this lower high strongly. As you can see, we are breaking the lower high strongly before a pullback. This is a valid strong market structure break that we can trust. There are two types of weak market structure breaks that could be fake. You should be aware of them. I still consider them as market structure breaks, but I always take a note by saying weak MSB. So I should be aware and more cautious. Some people do not even consider them as MSB. So easy to spot them. The first one is very similar to strong MSB. However, instead of breaking the last lower high at once with strong candlesticks, price struggles a lot. You will see lots of wicks and quite a struggle. If the price returns from here, it is a weak MSB. Simple as that. Let's see an example. As you can see, we have long wicks that make the market structure break. However, we do not see candlestick closes or strong candlesticks above the last lower high price level. So, this is a weak MSB. It could be fake and not fully trustable. Second weak MSB. Where is our deepest lower low? Yes, here. Which lower high creates it? Yes, this one. So, until we break that lower high strongly, we cannot consider it a strong MSB. Sometimes price will struggle and make ranges. Breakout from the small range is considered a weak MSB. Again, to be valid and strong MSB, it should break the lower high, which creates the deepest lower low. Let's see an example. Can you identify the deepest lower low? Yes, this one. Which lower high creates that lower low? Yes, here it is. So we have to break this one for a stronger and more trustable MSB. Okay, step 2. Understanding the entry zone. Now, right after a strong market structure break, we can determine our strong entry zone. This is the secret of price action and smart money traders. The area between the last lower high and the deepest lower low is our entry zone. This is where we seek possible entries. For now, I will keep it quite large for you to understand. Later on, we will learn about how to make sniper trading entries with specific price action strategies. Why is this an extremely important entry zone? Because this is where all the market makers and institutional entries happen. There are order blocks, breaker blocks, mitigation blocks, high volume nodes, low volume nodes, imbalances, Quasimodo, optimal trade entries, Fibonacci zones, volume profile key points, supply and demand areas. So you can use sniper trading price action levels from any of those. I will teach every single one of them with example videos. Let's see an example. 1. Identify the deepest lower low. 2. Identify the lower high creates the deepest lower low. 3. Confirm a strong market structure break. 4. Draw your entry zone between lower high and the deepest lower low. This is so simple, guys. Price action and smart money trading are simple. You just need practice. Step 3. Patterns. Before moving on to the entries, I'll talk about chart patterns. Normally, smart money traders do not involve themselves with chart patterns. However, you are about to witness a key trading secret of chart patterns. Yes, it all depends on market structure breaks. Let's check a head and shoulders pattern. The same strategy again. Strong downtrend until the price hits a support area and struggles. Waiting for a market structure break. We determine our entry zone. Then price moves back to our entry zone. Finally, we are searching for a suitable entry. Another example, wedge patterns. Downtrend until price struggles. Market structure break happens with a strong candlesticks. Finally, price pullbacks to our entry zone for a possible trade entry. So, what I want to say is this. It does not matter if you are a retail trader, price action trader, smart money trader, or even if you trade only indicators. Market structure breaks are the core of all trades. Every single trader should recognize market structure breaks from 1,000 miles. Otherwise, it's impossible to make consistent profits. All of my real trades that you see in my posts, over 30%, 50%, or 100% profits, depend on market structure breaks. That is one of the first things that I look for before I start trading. Step 4. Entries. Yes, the most critical and probably the hardest part. As I said before, we'll learn every single entry area, such as order blocks, Quasimodo, or Fibonacci levels in the next videos. Please subscribe if you are interested. The first entry type is using the same time frame without checking the low time frame. In my all videos, I talk about the importance of these three candlesticks: hammers, pin bars, and spinning top and bottoms. These specific candlesticks are critical for finding entries, especially with long wicks showing us the strong will of the buyers or sellers, and the following strong candle forming us a bullish or bearish engulfing pattern for entries. Let's see the example. As you can see in this example, price pullbacks to my entry zone right after a strong market structure break. Now checking for the pin bar and the next strong candle. I entered the trade with the bullish engulfing pattern. Don't worry, this video is about technical teaching. Next video will be full of trading examples. The second entry is the strongest entry type in the world, used by all pro price action traders. Finding entry zone in high time frame and finding entry points in low time frame. So for example, you confirmed market structure break at a 4 hours time frame and waited for a pullback. Then you go to the 5, 15 or 30 minutes time frame and look for a micro market structure break. This is how all pro price action traders enter a trade. This is how people make sniper trades with 100, 300 or 500% gains. Let's see an example. Right now we are looking at the same ticker. On the left, we are looking at 30 minutes time frame, confirming our market structure break strategy. 1. Identify the deepest lower low. 2. Identify the lower high creates the deepest lower low. 3. Confirm a strong market structure break. 4. Draw your entry zone between lower high and the deepest lower low. Okay, now, when the price pulls back to our entry zone at 30 minutes time frame, you open the 5 minutes time frame, which is on the right. You see this little part? Yes, we are looking at this area in a 5 minutes time frame. And then you apply the same market structure break technique and enter the trade from the micro entry zone. That's it.
Thanks
This
for
is
watching.
how
Do
people
like
like
and
me
subscribe.
make money over 100%. Okay folks, I hope that you enjoyed our first lecture, which is about market structure break trading strategy. I've tested and used this method so many times. This is what I do in my day or swing trading live with stocks or crypto futures. The next video will be about real trading examples.